So we just kind of got a breakdown of the tech sector right there from Steve Kovac. I want to get your take on Apple first and foremost. Why don't we start there? What do you make of Apple and some of the moves we've seen in that stock this year?
Yeah, and I think it's a great example of the market trying to figure out who's going to be the winner in this next new technology of AI. And there was obviously some hopes that by launching Apple Intelligence, there would be some nice replacement cycles in years to come. That hasn't really worked out. There's obviously been some changes to the management in Siri, and they're a little bit back to the drawing board. Now, Apple historically is not normally the first, but they just tend to do it better. So I don't think their story's over, but I can certainly understand why the market's taken a more dim view of their near-term outlook until they get that credibility in terms of being able to deliver on the AI side.
All right, so you say also that when it comes to valuations, this is an interesting take, that the E doesn't necessarily matter. You have to decide your own E. I'd like you to really explain that thesis. I'm looking at shares of Palantir right now. So the forward PE is 236. So how do you come up with your own E to either justify or not justify that?
Exactly, and we like to say that E's are often taken as fact, but they're actually opinions, and those opinions can often be very wrong. And the tech sector is the one sector where you really want to go and do that work. And obviously, as fundamental investors here at Janus Henderson, that's what we're doing and all the teams are doing day in, day out. So to think about that, the stock moves in advance of that E hopefully catching up. And you really do need that E to catch up. Otherwise, it's all hot air, and hot air can go into the balloon. It can come out of the balloon. Now, we would certainly say in some instances, that's going to be pretty hard to fill that gap. And again, that's where we need to be discerning as to which stocks are just really just going far ahead of what their realistic earnings assumptions could be, and where there are opportunities on the other side to be able to say, look, this stock is actually going to earn 10 times more than people thought, like an NVIDIA in the last 2.5 years. That makes it actually quite an easy stock to own.
All right, so I want to talk about another part of the tech sector, cybersecurity. A lot of eyebrows have been raised about cybersecurity and a lot of attention to it after the conflict over the Middle East and people talking about the potential from hacking and things from Iran, bad actors. How do you decide the E there when we don't really know what's going on? We don't know the actual resolution of that conflict, or even if there's hackers in Iran that are trying to target U.S. companies?
Well, I think it's just another episode of just more threats, and that's going to keep coming. So at least when you think about cybersecurity budgets for a firm, despite all of the volatility, everything, all the macro uncertainty, that's probably one area of budget they're not going to be cutting back. So that's going to be a pretty solid place to be. And then you think about, where is that technology going as we move into a quantum world, and there's going to be more threats that are going to coming down the pipe, and people have got to think about those next generation solutions. So again, from our side, we're thinking about where could those budgets go realistically? Who are the best positioned players within that to be able to come against those threats in years to come? And where can they create platforms and not just single product? I think that's the history of cybersecurity. It's a long history. There have not actually been that many great stocks. And that's because to actually find companies who can build that platform is actually pretty hard.